Alright guys, big update today. The US economy isn't looking good and the truth is starting to leak out. Now over the past 2 years, we have been getting awesome data across the board from the United States. From employment readings all the way to consumer spending, the Biden economy juiced everything up. And that's why the stock market has been on a non-stop tear. But even Wall Street, they have been sounding the alarm bells. These are people watching the data and the worst case scenarios are starting to converge. JP Morgan already gave the odds of the coming recession at nearly 50%. We could have persistent high interest rates that pushes off a cliff. The odds of this is at 25%, while a crash landing from extreme US policies like tariffs could also send us spiraling into a recession, and the odds of that are 20%. But it's obviously much higher today. However, optimism is still extremely high. The underlying fundamentals of the economy are collapsing. And if you're in the markets, it's really important to understand the lag effect. Biden's economy was juiced up by nearly $2 trillion in deficit spending. And now Trump is waging his big global trade war, and the big guns won't come out until later in March and April. Which means there's going to be a big macroeconomic shift that will shock the markets. If Trump's tariff war destroys global trade, we could see global liquidity and spending dry up in a hurry. Since 2023, US companies have been operating in a world of fiscal dominance. In other words, even though interest rates were rising, the US government was spending a ton of money to keep the party going. Despite the Fed hiking rates and despite the 10-year hitting nearly 5%, there was still a ton of money available. People were still out there spending. So earnings kept going up and returns were driven by micro factors like individual company performance. But all that might be about to change. We could be moving back into a period where the market moves in tandem with the chaos that we are all seeing in the global economy today. So if a collapse happens, everything could come crashing down together. And we have to focus on the upcoming Trump tariffs. This time bomb might be the final straw to break the backs of the US consumer. By April this year, at least 7 tariff shocks are coming for the US economy. An additional 20% tariff on Chinese goods coming in, 25% across the board tax on Mexican and Canadian goods, a 25% tariff on global steel and aluminum imports, a 25% tariff on imports coming from the Eurozone. And let's not forget a 25% tariff on cars, pharmaceuticals, and semiconductors. Let's throw on top the reciprocal tariffs as well. Now, all this will take time to work its way into the US economy. We could see a sudden spike in inflation that just won't abate. And if the US buckles, well, so will the world as well. We are in a globally synchronized economy. Now, on Friday, the Atlanta Fed's GDP tracker just had a revision, and it shows that the US economy will contract in Q1 this year. Now, the previous forecast was a growth of 2.3%, but the Federal Reserve has now revised this down by an insane 3.7 points. In Q1, the US economy is expected to contract by 1.5%. The US economy is suffering from a double whammy. Firstly, the trade deficit is widening. More imports are coming into the US, so spending on domestic US goods is dropping. Now, secondly, consumers are spending less. In January 2025, consumer spending fell by 0.5%, and this is the biggest decline in almost 4 years. We are starting to see reality catch up. Biden basically gave Trump an economic time bomb, and the star of The Apprentice, he's about to make things worse. Remember, we aren't factoring in Trump's trade tariffs just yet. But just like his stance on Ukraine, we must take Trump at his word that he's deadly serious about reshoring production. Tariffs are his sticks to clobber the world to make it happen. But consumers simply aren't having it. Spending confidence have dropped back down to the lowest level since 2022. Inflation expectations are even worse. Consumers now believe inflation in 2025 could hit an incredible 6%. And that's the feeling on the ground. And as we all know, sentiment shapes how people are going to spend their money out there. Trump is simply doing too many things at once. He's cutting federal workers to bring down wasteful government spending. Now, that's very commendable, at least to me, but realize it does a number on overall economic consumption. Someone's federal paycheck is another person's revenue. Secondly, tariffs are going to increase the cost of production substantially in the United States. Not all imports coming in are direct consumption goods. Nearly 50% of all US imports are intermediate inputs to the production of American goods. Take steel, for example. This is one big intermediate input. It's a raw material needed to make American cars, especially in Ford and GM factories. A 25% tariff on steel will raise production costs of American made cars, so US products now cost more. US factories are going to face a hostile environment of higher inflation, and this is during a period when interest rates are also sky high. So, this is going to snowball into a higher price tag. US factories are seeing the highest input costs in 24 months. The prices of lumber and steel are heading back up to the pandemic levels. And either way this plays out, the end game is bad for the economy. If producers decide to eat the cost, their profits would drop. So salaries to workers could get clobbered and layoffs might even happen. We already have profit warnings across the board from brands like Walmart. But if retailers decide to pass the pain on to consumers, then direct earnings could collapse. Top line revenue could get hit, which would be even more devastating. Now, in a manufacturing survey by the Dallas Fed, US producers are sounding the alarm bells. And it's not just a crisis in heavy industries, but in staples like food production as well. Listen to this carefully. As a food manufacturer, we have noticed small customers are struggling. They are unable to pay bills on time, and the larger national customers have reduced their purchases. So consumer demand is already weak, not a good sign. Trump's policies are only going to make things worse. Imposing tariffs on our major trading partners will lead to higher consumer prices. The items we import are preparing to raise prices. This food producer is facing a double whammy which could get worse under the new tariff regime. The big shock could come when Trump imposes reciprocal tariffs on the world. That could grind a ton of global trade to a halt because Trump has a very wide definition for his upcoming punishments. And a big shout out to our sponsor today, Indigo Precious Metals. When it comes to buying gold and silver, I trust Indigo Precious Metals in Singapore. They have made investing in precious metals safe, fast, easy, and simple for both small and large scale buying. I've been stacking gold for over a decade now, and I've learned two things when buying. You want to buy authentic gold bullion, and you want to buy it at the lowest premium possible to stretch your dollars even further. And I'm glad to say I found both of this at Indigo Precious Metals. Indigo Precious Metals is a leading retailer in Singapore. They specialize in physical gold, silver, and platinum. They are my one-stop shop when it comes to buying bullion. Their prices are sharp, and they have the best brands on sale, and I can test the gold on the spot. So if you're looking to make your first gold purchase, Indigo Precious Metals is the best place to start. Whether it's 1 ounce or 1 kilo, this is the reputable dealer you are looking for. So take action today. Click on the link below and enjoy a discount on your first purchase with the code SEANFOO. Start your gold stacking journey today.
We'll no longer allow other countries to ransack and plunder our nation. That's why I've announced that we will soon begin imposing reciprocal tariffs on any country that engages in unfair and unequal trading practices. European Union, they have a VAT tax. It's devastating. It's very tough for people on the outside. Hard to sell cars, really impossible to sell them because they also have non-monetary tariffs that are very, very tough. But if you take a look at that, it's a very unfair situation. And the VAT tax is similar to the tariff.
Now, the big domino here will be including VAT or value added tax in the tariff calculation. Now, VAT tax is an internal consumption tax imposed by local governments. It's bizarre how Trump wants to lump this into the calculation, but the effects are undeniable. It would be devastating for global trade and US inflation. Under a VAT tariff regime, the whole world would suffer at least a 10% import tax punishment. Goods from the EU in particular will get slapped with an overall 21% tariff hit. Even stuff from Japan coming into the US will face a 10% tariff at a minimum. Now, of course, it will be the US consumers that pay the price, but at this point, it doesn't matter to Trump. He's 100% convinced exporters pays the additional cost, so tariffs are most certainly coming for the world. And ultimately, this is bad for everyone. Some exporters will have to take the hit, especially those in Europe, so revenues there will drop. And in the US, consumers will also have to pay more. You can't just conjure up supply chains from thin air, so there's no escaping higher inflation. It will happen. However, let's talk a bit about gold for now, because despite the threat of an economic collapse, major banks in the US they're still forecasting higher gold prices. Now, according to Goldman, gold prices could climb by a further 8% this year. We could end 2025 with gold at $3,100. Now, the bank has revised their projection for gold upwards, which is quite shocking and rather bullish. Now, when gold prices rise, it's not exactly a good thing for the economy. It signals the collapse of fiat currencies and a world in chaos. And when money is getting debased, and when geopolitics goes haywire, people they turn to gold. The fear of tariffs causing higher inflation, more geopolitical risks, and higher government borrowing around the world. And all these are more fuel for the fire. Now, of course, this is barring a total economic collapse. If we do get a recession or a depression, then every asset on planet Earth, including gold, could crash very badly. Now, can the bank be wrong? Sure. But if you have been paying attention for the last 3 years, we are in a very different world today. In the past, people would argue that higher US rates would crush the price of gold, and it did make sense. Gold doesn't pay a dividend or yield. It's just a piece of inanimate object. It's a piece of metal that sits around and does absolutely nothing. There's zero cash flow and no business behind it, but there's something we can't discount. Gold is a trusted store of value that can't be debased by government printing. Now, this chart from JP Morgan is fantastic. Gold has developed a smile profile versus US bonds, which means the more volatile US Treasury yields get, the faster gold tends to move upwards in price. When yields crashed by over 30 basis points, gold rose by 5% or more. Conversely, when yields rose by 30 points or more, gold stayed flat or rose by 2%. It's the safety trade once again, but this time money is flowing into bullion. In other words, the rule book has changed. What was true for gold decades ago is likely very different today. The dollar is becoming less of a safe haven, even though Trump's trade war threatens to crush global currencies around the world. JP Morgan has outlined two different paths for gold to rise higher, and we are likely now on the disruptive path, and this includes higher tariffs, trade tensions, stronger inflation, and budget deficit expansion. Now, chaos isn't good, but as we said many times before, these are the times we are living in. We don't get to choose the environment we invest in. And there's another big driver for gold we left out all the way to the end, and that's central bank buying. And if there's one pivotal moment for gold, it was the freezing of Russia's sovereign assets. Here's how extreme things have become. Before the confiscation, institutional gold buying from London stood at only 17 tons a month. But in December 2024, this amount ballooned to nearly 110 tons. It's a five-fold increase, which is very shocking. It tells us there's a serious breakdown in the financial world order. Now, we all saw what happened in the Oval Office last week, and the war is far from over. And just to underscore this point, the chaos in the world could get much worse.
We will keep the military aid flowing and keep increasing the economic pressure on Russia to strengthen Ukraine now. In the event of a peace deal, we will keep boosting Ukraine's own defensive capabilities to deter any future invasion. We will go further to develop a coalition of the willing to defend a deal in Ukraine and to guarantee the peace. The UK is prepared to back this with boots on the ground and planes in the air. Together with others, Europe must do the heavy lifting.
So it isn't over yet. We can expect more twists and turns, hundreds of billions more sunk into the war. And we have no idea of the second order effects this will have. But let me know what you think. Is the US economy on the brink of a recession? And how high can gold prices go in 2025 and beyond? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.